The sports and supercar market experienced a thrilling ride during the last 3 years. Exhilarating highs and unforeseen twists turned dreams into reality, but also resulted in brutal financial loss. The pandemic triggered a series of events that introduced us all to the golden years of car prices. Lockdowns, economic uncertainty, and government interventions resulted in surging demand and plummeting supply. Suddenly, investing in cars was no longer something for the elite. Cars were no longer traded at exclusive auctions. The increasing number of online auction platforms brought the supercar market into the homes of many. Inevitable, the scarcity level in the market increased and resulted in a playground for speculators where every purchase seemed destined for profit. Some cars increased by 50%. The growth rate was unprecedented. But beneath the surging prices, fractures started to emerge. In the first half of 2022, the tide shifted and the rules of the market changed. The market topped, and the era of guaranteed profits came to an abrupt halt. It was bound to happen, of course. The growth rate was unsustainable, and the invisible hand eventually stabilized the market. Cars were selling slower and slower, and hereby increasing inventory levels, and speculators could no longer flip cars. It took, however, up until the summer of 2022 before the realization kicked in fully. What followed was something that we didn't see for many years. Partially fueled by increasing interest rates, cars started to depreciate again, and they did so at above normal rates. The average rate for sports and supercars was 10.4% during last year. Let's dive into the data. Over here we have the US year-over-year price changes for almost all cars that feature on my channel. So what can we see? On the horizontal axis we have the price change compared to last year in percentages. And on the vertical axis we have the number of cars to which this change applies. For example, we can see that 32 cars lost approximately 10% and that one car gained almost 30%. A total of 135 car models are included, and this means that this graph is based on a sample of the complete market. It mainly includes sports and supercars between 2000 and 2023. Moreover, it focuses on the cars that potentially have interesting value developments. Therefore, we can see that the tail on the right hand side is rather fat. Now this graph reveals a few interesting insights. First, we can see that the price trend was clearly down during last year. We can see that the average price decrease was 10.4% and that most cars lost between 2 and 18%. So there's a high chance that your sports or supercar belongs to this group. However, there are always exceptions. Prices for some cars continue to increase, and they are not just high-value exotics that are unattainable for most of us. Of course, you find the known suspects like the F355, 996 GT3, 458 Speciale and 599 over here. But also some 987 and 986 Boxsters fall on this side of the graph. Looking at the other end, so at the cars that lost the most, we can see that this includes cars like the Panameras, Taycans, AMG GTs, but also the SF90. Not a surprising group of cars if you've been following the channel. Now looking at these two extremes, so at the cars that lost the most and the cars that lost the least, we can see an interesting pattern. It are the oldest cars that, in general, held up the best. If we split this graph by age group, we can see that cars that are between 0 and 3 years old lost on average 13%. That is 12.5% for the cars between 7 and 11 years old, 9.6 for the ones between 3 and 7 years, and 6.6 for the ones between 11 and 25 years. Clearly, the group with the oldest cars performed the best. Heritage and timelessness proved to be a good shield against the forces of the market. But this makes sense, right? New cars are subject to the traditional depreciation effect and the market effect, while older cars are mainly influenced by the market and the mileage that you add to the car. At first though, the average price change for the cars between 3 and 7 and 11 and 25 years old looks rather similar. This would falsify the idea that old cars did better, but averages can be deceiving. Look for example at the right tail of the distributions. It's much fatter for the older cars. In practical terms, this means that there is a select group of older cars that are relatively immune to the market trend. Now the charts and the data that you just saw have some limitations. They're based on point-to-point comparisons and don't account for any price uncertainty, and they're based on just a sample of the market. However, Also, others confirmed that the sports and supercar market declined by rates that we didn't see for a long time. A cool-off was inevitable. Looking at the Hagerty Market rating, we can see that the rating dropped by 6.6 points compared to 1 year ago. And this rating isn't just any rating, it's rather smart and measures the current status of the collectible car market in terms of directional momentum and the underlying strength of the market. It does this by taking the weighted average of all sorts of variables, like the Hagerty Price Guide indices, insured values, macroeconomic indicators, and expert sentiment. Most of these indicators deteriorated during last year, causing the 6.6 drop in the market rating. Median sale prices at public auctions and between individuals fell. Median values in the Hagerty Price Guide are down, and optimism of the market experts is at the lowest point in 3 years. Even the Hagerty Market Index, which is an inflation-adjusted open-ended index based on the change in dollar volume of the market, is down by 6.6 points compared to last year. Now, after inspecting all of that data, it's crystal clear that the market cooled off during last year. The descent was an awakening, a reminder that most cars are depreciating assets and that flipping for profit is something that mainly belongs to highly desirable niche markets. However, amidst all these plummeting prices, there's hope for those of you who are simply aiming to not lose a fortune on your sports or supercar. The latest data shows promising signs of more stable prices. Over here we have in blue the price changes during last year, but in orange the price changes during the most recent 3 months. Of course, the change over a short period of time is likely to be much smaller than the change over a long period of time. Yet, if prices continue to fall at an annualized rate of 10.4%, we could expect an average price decrease of 2.7% during the last 3 months. But as you can see, the decrease is much smaller. On average, cars lost 0.8%. 72 out of the 165 cars even increased in value. Now, with a median increase of 3.3%, this is nothing like the pandemic price surge. But let's have a quick look at some examples to make this a little bit more concrete. Over here we have the price trends for the 991 GT3, and we can see indeed that prices are down compared to last year, but that the trend stabilized in the most recent period. 991.2s are up by 1.8% and .1s by 1.4%. These increases are supported by the confidence intervals. Also, they show a recovery. The same basically applies to the 991 GT3 RS. But it's not just the expensive stuff. Prices in the Ford Focus RS market also stabilized. We can see that they didn't change in the last 3 months, while they were clearly falling before. After a year of falling prices, I think that these are welcome changes for owners. However, I think it's unlikely that we're looking at a market bottom. As we saw in the distribution comparison before, the price stabilization doesn't apply to all cars. First generation BMW i8s, for example, lost 4% in the last 3 months, bringing the year-over-year decrease down to 17%. Therefore, I think it's much more likely that these price stabilizations are a reaction to the above normal depreciation rates that we saw during last year and potentially the expectation of less severe interest rate increases. Looking at the average rate for a 5-year car loan, it's quite obvious that this is a driver of the price decreases that we saw during last year. The first signs of the price decreases occurred in the beginning of 2022, exactly when rates began to increase. When rates continued to increase after the summer, the price decreases accelerated. Now that the Fed skipped a rate hike in June and the magnitude of the rate increases are decreasing, it's not unreasonable to expect a concave development in the future. And this expectation could have an effect on the prices. Now, when it comes to future prices, we can only speculate, and my opinion is probably just as good or as bad as the one of anyone else. After all, I don't have an evidence-based model that can predict car prices with a high degree of certainty. So please take that into account. Anyways, based on what we saw, I think it's fair to expect a continuation of the price decrease, but at a lower rate than what we saw during last year. Last year is likely to be an exception as we came from an extraordinary market environment. At the same time, rates are likely to be high for a long time and supply is catching up. Therefore, it seems unreasonable to expect another round of big price increases. Now overall, the sports and supercar market experienced a fascinating journey. Rewind to the not so distant past, where the pandemic triggered a series of events that led prices to surge to an unprecedented high. But it all ended in the summer of 2022, when virtually the complete market topped. High prices and increasing rates pressured the affordability, and consequently, cars were spending more and more time on dealer lots. An above-average price decrease followed during the next year. However, there's hope for all of you who simply aim to not lose a fortune on a car. Recent data suggests that for some models, depreciation rates are less high than before, and this could signal that the market is slowly returning back to normal. That is, one where most cars are losing money, but also where new cars are expected to lose much more than older models. Now if you enjoyed this data-driven way of analyzing the car market, but would like to see a video for a specific car, head over to my channel. Over there you'll find detailed market analysis for a large variety of cars. Can't find the car you're looking for? Let me know the name of the car by commenting it down below in the comment section. Once there are enough requests for a certain car, I'll make a video about it. As always, thank you for watching, and I hope to see you next week for a new video.